Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, October 2nd, and tomorrow, Thursday, October 3rd, is my mom's birthday. She turns 75 tomorrow, and she does watch my channel. She doesn't know what I'm talking about, but she watches my channel, so leave her a happy birthday. Happy birthday, Mama. All right, so SPY, we did start the day off today with a gap down, and then we took it down to the 30-minute 200 moving average, and just a little bit underneath that, we had the top of the gap from FOMC. This is where we got the rate cut and gapped up, and the top of that gap was right here with that 30-minute 200 moving average. And those two levels brought us back up to the 35 EMA, and we did see that level as a resistance today. We did close down just underneath it, and day over day we closed almost completely flat, up 0.04%. In SPX we saw the same gap down. Right here we gapped down, and then we did get underneath the 30-minute 200 moving average, dropped down to the top of that gap, and to the penny, that was where we did bounce back up, and we took it all the way back up to the 35 EMA. That 35 EMA did hold as resistance today. It was a very flat day, up 0.01%. So SPY up 0.04, SPX up 0.01. VIX came down 1.87%, and we stayed completely within the implied move today. So not a very difficult day over here today. And then taking it over to QQQ, we did open with a gap down here as well. We did drop underneath the 30-minute 200 moving average. That took us right to the gap from FOMC. You can see this long wick right here. As soon as we gap down, we drop down, and that's where the buying happened. That same thing happened right here, and that pulled us all the way back up to the 35 EMA. And if you were expecting this 35 EMA to be resistance, like we talked about last night, then you were prepared to take profits at the top of this swing right here. QQQ closed up 0.14%, pretty flat today. VXN closed down 1.48%, and we did stay completely within the implied move today. And IWM, you can clearly see the bearish signal that we got today in IWM. We saw that 35 EMA come underneath the 30-minute 200 moving average. So 2 days in a row, we first saw that gap down yesterday, and then today we saw that follow through with that 35 EMA taking this time frame bearish. So we did open with a gap down. The body of the candle settled right here on the 1 hour 200 moving average. We have been seeing support along that level since the start of the week. So that first candle, you can see the wick. We did drop underneath that, but we got pulled back up all the way to the 35 EMA, and then that smacked us back down, and that led the way for the 35 EMA to see that bearish cross down. So we are officially bearish in IWM. IWM did close down 0.14%. VX, the Russell Volatility Index, did also close down 1.46%, and we did trade completely within the implied move today. And lastly, DIA. DIA did stick really closely to that 35 EMA today. The first candle, we did see a drop, and then we took it down to right about where we had our first support level. That was 420. And we did get a little bit underneath 420, but that did swing us back up to the 35 EMA, and then we did chop around that level. We did end up closing green, up 0.1%, and we did stay within the implied move. So we did close green today. It looks like we closed in the red because this is the implied move for the week. So for the week, we really have been staying to the red side of the trading range, consolidating back to this 30-minute 200 moving average, but we did actually close green on the day. All right, so that was a recap of today. It was not the most exciting day, but maybe tomorrow will be better. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, don't hesitate to leave me a comment. I will get back to you. And if you took a really great trade this week and it's directly because of something you learned from this channel, an easy way to give back is to hit that thank you button, and that does help to support my channel. Alright, so starting in SPY, tomorrow's implied move is between 564 and 574, and that is from options. The 30-day average volatility is between 562 and 576, and the implied move on Friday's contract is actually wider than the 30-day average volatility, so the market is expecting more volatility on Friday, and that is between 561 and 577. To the upside, the first level to look for is going to be this 35 EMA. Since the beginning of the week, we have seen that as a resistance, with the only exception being right here, and that is where Powell spoke on Monday. We did see that pop up above, and then we closed just underneath all-time highs, but then the next day we did gap down and we dropped and we got back underneath the 35 EMA. And then when we came back up to it right here, we saw it as resistance. And then today, all day, that level was resistance. So that is directly above us. If we do happen to get above that and see that level as support, the next target is gonna be this gap right here, which is at the very top of the implied move. That is the down gap that we did make on Tuesday, the day after Powell spoke, and just above that is all-time highs. And then the implied move on Friday's contract, the top is at 577. And then underneath us, the next level to look for is going to be the 30-minute 200 moving average. We did see that as support today. All week long, we've been consolidating back to it. Today, we did tap that level. And then when we did bounce, we came back up to the 35 EMA, and there we got pushed back down. And underneath that, we do have this gap right here. This is the up gap that we made right after the FOMC rate cut. We saw that level, the top of the gap right here, team up with the 30-minute 200 moving average today to bring us back up. So if we do get back underneath the 30-minute 200 moving average, then I would be targeting the top of that gap next, and then the bottom of the implied move is at 564, and the bottom of the implied move on Friday's contract is 561, which is underneath the 1 hour 200 moving average. So definitely an interesting trading range, and if jobs data on Friday comes in hot, then we might find ourselves down towards the bottom here, and then that 1 hour would be there to catch us. And then SPX, the implied move over here is between 56.60 and 57.55. That is from options. The 30-day average volatility 56.35 to 57.80. And then on Friday's contract, it is a little bit wider than the 30-day average volatility, which is something we only see if the market is expecting high volatility, and that is between 56.30 and 57.85. And to the upside, that 35 EMA. All week long, it has been resistance. We finally lost that level on Monday. It's been a pretty solid support for quite a while now. Let me see when it goes back to. Down here when we bounced off the 4 hour 200 moving average, we got back above the 35 EMA here, saw that huge push up, and it's been our support ever since. So we finally got underneath it, and except for that time where Powell spoke right here, we did see that push up, and then the very next day we gapped back down, got back underneath, and it is resistance again. So 35 EMA is directly above us. If we do get above that, bulls are going to be targeting the top of the implied move, which has that down gap from after Powell spoke. So that is 57.55. All-time highs are at 57.6737. And then the top of the implied move on Friday's contract is 57.85. And then to the downside, we have the 30-minute 200 moving average. We did see a bounce on that today, and we did close right between two key levels on the chart, and that's the 35 EMA and the 30-minute 200 moving average. And one way or the other, we're gonna break tomorrow. Those two are closing in on each other, and if this 35 EMA gets underneath the 30-minute 200 moving average, we will officially be bearish in SPX. We are still neutral here now, and if we do break underneath this 30-minute 200 moving average, the next level to look for is going to be the top of this bull gap. This is the gap from FOMC where we got the rate cut and then gapped up. The bottom of the implied move for tomorrow is 56.60, and on Friday 56.30. That is a pretty wide spread between the two contracts, so definitely brace yourself for volatility. And 1 hour 200 moving average is underneath the trading range, and then the bottom of that gap from FOMC is at 56.15. These two levels could definitely act as support for the next 2 days, but if you're looking into next week and we do start selling off, then support is right here at 56.15. And you could see that even going back before the FOMC up gap, we did start building a support right here. So that is SPX. Taking it over to QQQ, the implied move for tomorrow over here is between 476 and, hold on one second, 476 to 487. That is from options. The 30-day average volatility is $4 wider in each direction, 472 to 491. And the implied move on Friday's contract, 474 to 490. To the upside, we also have the 35 EMA right here. It has been resistance all week, except we got above it right here when Powell spoke. The next day we dropped back underneath it. So 35 EMA, definitely the first level to look for. If we do get above that, we have 485, and I have to zoom out. This is going to be to the 1 hour time frame here, and 485 is right here. And for the last quarter, it has been a resistance level. So right here, and then again right here. This was in August. This back here was July, August, September, all resistance. And we did get above that into this bear gap, but we did get pushed back down, and that level is above us. So 485, there's going to be a lot of volume support there as a resistance. And then if we do get above that, then the top of the implied move is 487, and then 490 for the top of the implied move on Friday's contract. This right here is where Powell spoke, and we could add that as a resistance, 488. I wouldn't think that it'd be a strong one, but maybe just something to watch out for. And above all of that, we have the last remaining bear gap before we get to all-time highs. And then underneath us, the 30-minute 200 moving average. Let me just get a little closer in here. And we are still bullish here, and really we're neutral but leaning bullish because the 35 EMA is still above the 30-minute 200 moving average, but they are really close, and the possibility of this 35 EMA getting underneath the 30-minute 200 moving average is definitely real for tomorrow. So that is one of the clues that we're going to look for to see what direction we take. So if we do lose these levels, underneath us we do have 477. That is near the top of this bull gap right here. It is where we've been seeing support, and if we zoom out even a little bit further, you could see that level has had a lot of action as a resistance before it became a support. So we have a pivot level at 477. That is near the bottom of the implied move, which is 476. That takes us into the bull gap from FOMC. And then 474, I'll zoom out in just a second. That is that long level. We have been consolidating sideways for a few months now around 474. And 474 just happens to be the bottom of the implied move on Friday's contract. And it's hard to see, but right here is the 1 hour 200 moving average. It is flush with 474. So this flat momentum on the 1 hour time frame is very likely going to draw us into that gap. So then let's zoom out really fast and look at 474, and that is right here. You could see that for more than 3 months, it has been a pivot, support, and resistance level. Right here, 474 was support, then we gapped down, and then when we came back up, 474 was resistance. We had that really big drop, and then when we came back up, that is kind of where we consolidated, and then we lost that level, dropped. Right here we had a little bit of sideways, and then this was FOMC. That broke us away from that level, and we saw that pop up, and now we are back, and 474 is underneath us and at the bottom of the implied move for Friday. And right now, futures are pointing us lower, so that is a very real target for the end of the week. And just to get one more level out here, we do have the 50-day moving average. That is also the 2 hour 200 moving average. They are the same level. So if this flat 1 hour 200 moving average starts to curl down, if we lose that level, 50-day moving average is underneath. Momentum there is not all that strong, but that would definitely be the next target. Super messy here. It does actually look like a lot of fun, but it is very messy. And honestly, even though we're sitting right on top of this bull gap, this is the FOMC bull gap here, the momentum of the moving averages that are within it and underneath it are just dead. It feels like we're going to need to come back in here, retest those levels, see if we can bring them back to life. And in my opinion, I wouldn't trade this unless we see a move into some of these extreme ends. All right, and then taking it over to IWM, the implied move for tomorrow is between 214 and 221. That is from options. The 30-day average volatility is $2 wider in each direction. Sorry, $1 wider in each direction. It's 213 to 223. What is happening here? I have it backwards, 222. So $1 wider in each direction. This is where we have the implied move on Friday's contract is wider than the 30-day average, which means Friday is expected to see higher than average volatility. And that very well could be the case. We did get a bearish signal here and really a gap down plus a bearish signal follow through. We definitely could see a lot of volatility on Friday. And to the upside, the first level to look for is the 35 EMA. And we did see that cross down today underneath the 30-minute 200 moving average. That is bearish. And just because we did see that cross down, even if we do pop above the 35 EMA tomorrow, consider this 30-minute 200 moving average as a very likely resistance level. Then the top of the implied move is at 221. And right on top of that, we have this bear gap from Monday going into Tuesday. That is from where Powell spoke. And the next day we broke down and dropped back underneath the 35 EMA. So that is at the top of the implied move. And then on Friday's contract, 223 is at the top of the implied move. That is also at a resistance level. And then to the downside, the 1 hour 200 moving average has been catching us ever since after Powell spoke. And that momentum there is flat, which is why we didn't get a very strong bounce off of that. Underneath that, we have the 50-day moving average that is also flat. Bottom of the implied move is at 214, 212 on Friday's contract, and then we have a bull gap underneath and at the bottom of the trading range. So if you're looking into next week maybe and you're bearish and looking for a target, this gap right here, the bottom of that gap is at 211, which also would take us back into a long resistance level right here. So definitely seeing a bit of a breakdown after that FOMC rate cut. We've been making lower highs and lower lows, so right now the trend is down post rate cut. And then lastly, we have DIA, and the implied move for tomorrow here is between 416 and 427, and that is from options. Sorry, this is the 30-day average volatility. The implied move for the week is between 415 and 430, and that is because we only have weekly options in DIA. And here we have been consolidating all week. 30-minute 200 moving average, we've been consolidating back to that level, staying pretty close to the 35 EMA. If we do break up with some conviction, then the next target would be all-time highs, which is 426.20. And underneath us, we have the 30-minute 200 moving average. And if we do break this level, then the next level underneath that is this FOMC rate cut gap. We've been chipping into the FOMC gap in QQQ. We closed it out in IWM. DIA, it's very possible that we come back in and fight to hold this level as the market reassesses the interest rate cuts and what they mean for the market and for the economy. So there you have it, guys, everything you need to know to make tomorrow amazing. Have fun, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow.